Morning, Julia, to you. Dulux Group, the stock comes out of the gate firmer. Some costs associated with that takeover of Alesco. Beyond that, how's the story looking?
The story is looking pretty resilient, especially given the difficulty we know is happening in the housing and the residential markets at the moment. So if we have a look at Dulux, it's come in with a profit result of $33 million for the half year. Now, $10 million is costs associated with that Alesco acquisition. So excluding non-reoccurring items, we actually saw net profit up by around about 9%, so a good result there. If we break it down, sales was up by 31%, but of course that was a lot of the Alesco result. If we break it down into more historical methods so that we can compare the businesses to see how they're tracking, Dulux was up by around about 7%. Alesco on a pro forma basis was down by around about 2%. And if we have a look at these two different businesses, which are now merging into one, if we have a look at Dulux, it has very strong brands. And I think one of the key strengths here is its distribution network. It has very strong access to that do-it-yourself market here in Australia. And if we have a look at Alesco's business, well, it's a cyclical business. Its biggest area is garage doors and openers, and in that regard, it has been a very difficult area. If we have a look at the outlook coming through from the business today, they have said that conditions in New Zealand have been improving, but Australia still remains subdued. So I guess it's still quite a difficult market. We've seen those indicators in that building construction market still very soft here in Australia. Yet despite that, I think we've seen a pretty resilient result coming through.
Interesting that we're talking the dollar even in our top stories, and just eyeing Incitec Pivot, Julia, for all those reasons where you have a stock with key offshore exposure. You know, is this potentially going to be a game changer as we drift below parity?
Absolutely. If we do see the Aussie dollar continue to fall, that's a huge positive for our mining space. The Aussie dollar is usually called a commodity-based currency, and that's because the Aussie dollar usually moves together with commodity prices. But in the last few months, what we've found is that commodity prices have tumbled, but the Aussie dollar has remained stubbornly high. And that's been a double negative for our miners, where they have seen a fall in the commodity prices, but that hasn't been offset by that fall in the Aussie dollar. So if we see the Aussie dollar easing up, that would be good news for the miners, which have been struggling. And if we have a look at Incitec Pivot's result, really reflective of those particular conditions where we have seen commodity prices declining, but the Aussie dollar remaining stubbornly high. And that's a key thing that's really held its result back. We've seen first half profit down by 23% at $110 million. That still beat our expectations. We were actually expecting to see a fall of 30% there. The explosives business, we did see EBIT earnings growing by 7% there. In fact, they saw a record result in terms of Dyno Nobel Asia Pacific, and the second highest result that they've ever recorded for Dyno Nobel Americas. So that explosive business still remains relatively strong, even though their Moranbah ammonium nitrate plant and the ramp-up plans there do still remain behind schedule. I think the market had been expecting that. It's the fertiliser result which has really let this result down. We've seen a 19% decline in earnings there, and that's as a result of lower commodity prices and the high Australian dollar. So as that high Australian dollar eases back, that should be a positive for Incitec Pivot. So while we have seen a 23% decline in the half-year numbers today, still above our results, our expectations in terms of these results.
Julia, give us some thoughts on how we might see Stockland trade today. It's not online yet. You've had the profit warning, but also talking about the distribution. The company says it expects to maintain it, assuming no material decline in market conditions. So how do you think the market will take that?
Brooke, I think the headline sounds bad, that we're probably going to see a 25% decline in terms of net profit, but I don't think there's going to be a huge reaction in terms of share price, and that's because the market's already pricing in pretty much a 25% decline in net profit anyway. Stockland's previous guidance was a decline of 20 to 25%, so their announcement today means that it is on the worst side of expectations, but still within expectations, and I think most brokers had been expecting a 24 to 25% fall in net profit anyway. Now, this is a strategic review that was expected today, and of course it's by new CEO Mark Steinert, so watching his comments very closely, because we do have a new helm at the ship of Stockland. We have a look at Stockland, though, as you mentioned, Brooke, they have come out to reaffirm distribution both for this financial year as well as next financial year. So that's a 24-cent distribution, and that gives shareholders a little bit of certainty over the next 18 months. There will be a few changes. We know that there's some impairments related to the residential unit, and we know the residential unit has been quite a tough area. And we know that these impairments are occurring because Stockland's choosing to liquidate projects rather than pour in more capital for very little return back. We also know that in the office space, over the longer term, it does look like they're looking to reduce their exposure over a longer period of time. But in their industrial portfolio, they're looking to pick up assets where appropriate. So giving us just a little bit of insight into Stockland's strategy, especially given the new CEO is now on board. In terms of that profit downgrade, previously they were forecasting 20 to 25% fall in net profit. Now they're forecasting 25%. Overall, that's a negative, but I think consensus was at that lower end of expectations in terms of that profit fall.